The bull showed up at critical support within a bull trend. Who would have guessed? First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today's SPY was up 1.1%, and we did get to bounce off of the rising 20 daily moving average, and price action is back above all the moving averages, which are now still all positively sloping, so we are still in the bull trend. As I've said many times, all of the benefit of the doubt goes to the buyers and the bulls because we have the bull trend with the bullish price action, and anytime we're coming into critical support on decreasing volume, you instantly want to assume we are going to bounce off support because that is the highest probability chance, and trading is a game of odds. So right now, if you're betting against the bull trend, you are taking the lowest probability trade, even though there is a bearish scenario where we bounce to a lower high and then come down here and break down below critical support and then officially have a lower high into a lower low. If you are waiting to get bearish, you need confirmation that we're breaking the bull trend, which means you have no reason to be bearish until we see a lower high into a lower low. So for all benefit of the doubt, we are still assuming this is going to resolve into a higher low, into a higher high, which means if we hold this support at SPY 430, we are very likely going to SPY 450, and this is going to be our higher low into our higher high. It doesn't guarantee it's possible because there is the chance we get the lower high into the lower low, but the only way I would get bearish is if we get confirmation from the price action we're going into a downtrend, which is going to require proof from the bears and the price action to break down. If the price action doesn't do a lower high into a lower low, you need to stay on the bull, because if you don't trust the price action, which tells us we're likely going higher, you're going to continue to lose to this market. Still a lot of bears out there saying we can't go higher, and they've been saying that all year long, so it's way more important to follow the chart and the price action. So critical support on SPY remains 429 to 430, or the support trend line right around 427. As long as we're above this critical support, the bulls are still in control. As far as upside resistance goes, watch 436, the gap close right around 439, and the previous daily closing high right around 442. On the NASDAQ 100 triple Qs, we were up 1.72% today, and the triple Qs also had a nice bounce off of the rising 20 daily moving average, and price action is back above all the moving averages, and all the moving averages still have a positive slope. So if you're looking at the triple Qs, we still have a bull trend with bullish price action, and just like I said with SPY, we are going to need a lower high into a lower low before we can ever say that we're breaking down and getting bearish, and that's going to require a breakdown below two critical support levels, which are at 355 and 347. If we break all of that critical support, we're likely coming down to fill the gap at 333. And based on looking at the chart, that would happen sometime around the middle of July. However, we need confirmation from the price action. We can't just assume this is going to happen, because another likely scenario is that we continue higher and continue to break out. Now with the triple Qs, we are a little overextended, and even after this pullback, we are still relatively overextended. So I would not be surprised if we get some type of further correction and come down to 355 or 347. However, don't assume it's going to happen. You need to wait for price action to confirm it. And that means we're going to need to break down below this previous low at 357. So just let the price action do all the talking and give all of the benefit of the doubt to the bulls, because we're still in a bull trend with bullish price action. So there's no reason to guess we're going to break down, make the price action prove it. On the Dow Jones, we were up 0.62%, and just like the rest of the indices, we bounced off the critical support, which I told you was at 336, and price action is back above all the moving averages. So just like the rest of the indices, the Dow Jones is also going right back into the bull trend. Now with the Dow Jones, we're instantly bearish if we break 336, and then we're likely coming back down towards 327. To the upside, we're looking for resistance at 341 and the gap fill just below 343. On the Russell 2000 IWM ETF, we were up 1.44%, and again, we bounced off critical support at 180. Price action is back above all the moving averages, and the next critical resistance is just above between 184 and 185. Just like the rest of the indices, if we get that lower high rejection and we come down here and break down below support, then we can get a lot more bearish on a breakdown below 180 if we get a rejection from a lower high first. So just let the price action do all the talking. You know the critical levels, and the only thing that's going to tell you we're breaking down is price action breaking through critical support. On the ARKK ETF, we're up 3.39% today, bouncing from that support zone between 42 and 43, and we are now breaking back above the resistance just above 43.2. If we get the higher high breakout, it's going to require a break back over 44.5, and then we'll likely see the next price target higher just below 46, and the critical support is still down here at the breakout at 40.5. On the VIX, we were down 3.58%, and the VIX is crushing down below this negatively sloping 20 daily moving average, and the VIX is still down below 15, so we're still in a very low fear environment, which is exactly what you're going to see in a bull trend. So we're not going to get bearish until we see the VIX spiking out above 18 to 20. On Bitcoin, we're currently up about 1.3%, and Bitcoin is trying to break out yet again above 30,500, and I have the next upside price targets just below 32,000 and then up there right around 35,000. As you can see from the price action, we are very close to having the 20 daily moving average crossing back over the 50 EMA, which is going to tell us we're back into the full bull trend. So even if we do start getting a pullback, we are looking for support between 28 and 29,000 before we continue any higher. This is a bull trend, so we're expecting higher lows into higher highs. On Amazon stock, we're up 1.45% today, and we're still holding the breakout above 128, and we still have the bull trend with the price action above all the moving averages, and we have the outstanding upside price targets at 133 and 134. You could stay bullish above 125 and the critical support down here at 121. But if we start to lose the support trend line or support at 121, we could go through a full-blown correction that could take us back down towards 113. On Microsoft stock, we're up 1.82% today, holding on to all of the moving averages of support, which is the zone right around 334. So if we get that break back over 336, we are likely going to start marching higher yet again towards previous all-time highs right around 350. If we get rejected from 336, look for a retest of support at 323. On Nvidia stock, we're up 3.06% today, bouncing off of the rising 20 daily moving average, and we have this support zone between 398 and 406. If we bounce from this support zone and we break back over 427, I will be looking for my price target just below 450. If we break down below 398, the next support lower will be 374. On Tesla stock, we're up 3.8% today as we're bouncing off of the rising 20 daily moving average, and we're getting very close to retesting the breakout and filling the gap between that support zone of 230 to 235. Now there's many ways this can play out, and we can go straight down to that breakout right now and then continue into the bull trend. Or another possibility is that we bounce to a lower high off of the rising 20 daily moving average and then break down and get a deeper correction back down towards the breakout at 215, and then we continue back into the bull trend to higher highs. So no matter how this plays out, in the short term, we are expecting a pullback back down towards 230, or at least the gap fill at 235, and then we need to see if price action is going to hold that support or if we're going back down towards 215. Now in the short term, watch the rising 20 daily moving average, which is right around 242, because if we can't break below that, then we're likely going back up higher towards 268 and the previous high at 275. On Apple stock, we were up 1.5% today, and Apple broke out to another all-time high yet again. And I'm telling you right now, you are not going to see Apple trading at all-time highs at a bear market. So if you still think this is a bear market, you are being extremely subjective, because when you get market-moving names like Apple breaking out to all-time highs day after day, it is very difficult to convince somebody that's a bear market. You could say whatever you want, but the price action is doing all the talking, and the next upside target is just below 190, and we are bullish as long as we're above the breakouts at 185 and 182. On the financials, we're up 0.8% today, trying to hold on into this support zone just below 33, and the only concern I have is that we are still trading below the 200 daily moving average, so I'm going to be a lot more bullish if we could start to close above 33.6. The industrials are up 1.2% today, bouncing off of that support zone right around 103. And we could start to break out if we start closing above 106 and continue into this bull trend. The healthcare sector was down 0.23% today, still holding the breakout right around 130 to 131. And if we get a bounce from here, I'm still looking for higher targets at 134 and 137. On the energy sector, we are up about 0.25%, and it still looks possible to get a lower high rejection because we have the bear trend. So look for a rejection right around 79.5, and then look for a breakdown below support at 76.6 to fill the gap at 73. So jumping back over to the S&P 500, this is still a bull trend with bullish price action. So even though there is a bearish scenario where we bounce from a lower high and break critical support, we are going to need to be patient and wait for the price action to prove it. And until that happens, we are assuming we are going to higher prices, and the next higher price will be SPY 450. So let the price action do all the talking and check your bias at the door. And if you're waiting to get bearish, you need confirmation from the price action. Bears have been ignoring the chart all year long and have plenty of reasons why they're bearish and giving us plenty of fundamental reasons. But nothing matters other than trading what the chart is giving us. And if the chart is going higher, we need to stay bullish. Don't forget I have my own trade alert service called Bank Trade Alerts that sends you all of your buy and sell alerts directly via email and text message. And I also have the Stocks Channel Trading Discord community where you can get access to all of my intraday updates and analysis. You can find out more about either service or learn how to subscribe by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. As always, I will see you in the next episode.